Hello, everyone, and welcome. I'm Olga Makarova, a marketing manager here at COFAS, and we'll be guiding you today through this webinar. Thank you for taking the time to join us. During this session, we'll dive into how to get the most out of Urba360 Financials data. Our expert speakers, Ruth Tambo, Group Solutions Engineer, and Yusuf Kouali, Financial Data Engineer, will guide us through how key financial insights, use case, and best practices for Urba360 can help you make better decisions. A few housekeeping notes. This webinar will last for about 30 minutes, followed by question and answer session that will last about 15 minutes. If you have any questions during the webinar, please feel free to drop them in the questions tab or in the chat that you can see on your right. But before we begin, I'd love to get a sense of where everyone stands with Urba360. So let's start with a quick poll to gauge your familiarity with this tool. Just a second. You can see the poll now. Please participate. We'd love to know where you stand with Urba. Let's give it a few seconds. Okay, I see that most of you haven't started using Urba yet. About 11% are just starting and 15% of the attendees have been using it for a while now. Okay, sounds great. Thank you so much. During the webinar, we'll be sending out a couple of more polls. So thank you so much for your participation and engagement. And with that, let's get started. Ruth, over to you.
Thank you so much, Olga. Good morning, good afternoon, everyone, depending on your time zone. I'm thrilled to have you all here today. Let's start with a quick question. So I would ask a quick question and I would like to get your feedback. You could put your feedback in the chat. How confident are you in the financial stability of the companies you do business with? If you hesitated for even a second, then you're in the right place. At first, I would like to talk about COFAS, right? And how far we've come. We've spent over 75 years helping business like yours navigate the trade risk with confidence. Today, we're a global leader in trade credit insurance and business information. We're supporting companies across the world, nearly over 200 countries. One of the things we're most proud of is that we have over 670 billion euro in trade credit insurance coverage, giving your business the safety net that they need in uncertainties. But what truly set us apart is our combination of our global reach and our deep local expertise. With over 700 risk analysts and underwriters worldwide, we provide real-time actionable insights through our innovative platform, Urba360, which we would be showing today, and looking at how financials, reading the financials could help you manage and make strategic decisions. Think about your operations. How many of your partners can offer this level of global insight and protection? I would go straight into showing you a deep dive as to what we have exciting in Urba360. Now, I know financial data might not sound thrilling at first, but trust me, the right data can change the game for your business. Using Urba360 isn't just any other analytic tool, but it's our secret weapon for making smarter and faster decisions, which we believe would help you make faster and smarter decisions. Yeah, this is what makes up our Urba360. We have microeconomic insights that helps us anticipate the market trends before they impact your business, the payment incident tracking to flag financial risk early, historical trends to understand how a company has performed over time, balance sheet analysis to give a full financial picture and not just a snapshot. With these insights, you're not just avoiding risk, but you're also spotting opportunities. I'll go over to the next slide where you'd see the 6 insights we provide under Urba360 business overview. We have the score, and the score helps us calculate a probability of default over the next 12 months. We have the sector, which helps us provide sector-specific insights, the country, which helps us assess economic and political stability of your partners, your buyer, or your suppliers. We have the credit opinion, which helps evaluate your business partner, offering a credit limit recommendation up to $1 million. Analysis of the financial health, which is our key main focus today. We'll be talking about using the financial insights we provide at Urba360 and how that can help you make strategic decisions. And track payment behavior, the LPI, which helps in indicating potential financial stress with the late payment index that we have categorized into three. Before we now, I think it's time for us to focus while we're all here, the financials, right? And how what makes financial data matter. Why does financial data matter? I would say because in today's volatile world, it is the difference between thriving and merely surviving. You can see that from a financial data or financial um, sheet. Real life benefits, everyone or every credit manager or high risk supplier or risk manager would see is you protect your business from you get early insight to help you avoid risky deals before they become problems. You negotiate better terms, knowing a supplier's financial health gives you the upper hand in negotiation, as well as aligning with long-term goals. You need to have solid data to ensure that your strategic decisions stand the test of time. And who benefits the most? Today I'll base our demo on three key personas and how they could read the financial data and how that could help. First, we'd see the chief financial officer, and we all know that they use data to maintain financial stability to avoid risk. What are the things that a chief financial officer would want to check out in a balance sheet or a profit and loss account is if a supplier's revenue dips from 100 million euro to 95 million euro. Definitely a CFO knows to dig deeper to before making commitments with that company. If the head of supplier risk, we know their role is to keep supply chains running smoothly by spotting financial weakness before they cause disruptions. I would give an example from the balance sheet. If a supplier's current ratio is dropping from 1.5 to 0.9 or 3 to 1, this could signal liquidity issues and triggering proactive measures. What of the head of credit risk? What of a credit risk manager? What is the role of a credit risk manager? We all know that a credit risk manager assess the creditworthiness of their clients and partners to minimize financial exposure. An example from the financials again. Imagine a supplier with a high debt to equity ratio or frequent late payments. This could mean that the credit risk manager would have to make stricter credit terms or find a new supplier altogether. This definitely, like I said, the benefit of a good financial data is to ensure that you're protecting your business, you're negotiating better terms, and you're aligning with your long-term goals. I'll go to the next slide, and the next slide is now let's try to make this more practical. I've said a lot of conversations or topic or headers about from a CFO point of view, what do you look out for in a balance sheet, but we want to make it practical. Instead of just talking about the financial data, we're going to show a raw financial statement. We're going to show financials from Urba and the benefits you'd get from using Urba360 and the kind of key elements that we have. Here at COFAS, we have provided a standard format that simplifies financial evaluation. And before we jump into the demo, I'll let Yusuf talk about the key metrics we would have in a peer comparison and the financial ratios as well.
Thank you, Ruth. So let's start by profitability. We compute and provide financial ratios from the top line of the income statement to the bottom line. In this way, any analyst or decision maker can understand how the margin is created by the company and how it is expanded or reduced by several interim balances. We start with the variation of sales evolution, then EBITDA margin, that stands for earnings before interest, taxes, depreciation, and amortizations, uh, and so on up to the net income, the operating margin or net income margin. Uh, we also deliver the returns on sales from a commercial point of view, or return on equity to understand how the company is economically efficient, and for uh, shareholders, and also return on assets. The second area of financial ratios concern the financial structure to understand how a firm is capitalized and how it is financing its activity. It can either comes from debt or equity. So the equity ratio, the second one, gives a global idea and detail the proportion of equity and debt. So the higher it is, the better. But we do not deliver only data related to indebtedness or capitalization, but also day-to-day operations such as DSO and DPO, days sales outstanding, and days payable outstanding. I'll detail further during the demo. And these are key metrics for business with a supplier when for days sales outstanding, or with a supplier or clients as well. Finally, the third section about solvency and liquidity uh, covers the three main liquidity ratios from the less to the most restrictive. The cash quick and current ratio that measures the ability of a company to meet its financial commitments. So the higher liquidity ratios are, the better it is, and it stands for sufficient cash or easily convertible assets to meet short-term debt. So the 360 view provide at an at-glance view of key metrics by providing two ratios, so the two first one per each category, to give you a first insight of the company, and all the list, the 24 ratios, are available in the same dashboard, in the same page. Last but not least, in addition to providing this extensive array of financial key metrics, one of the most powerful feature of Urba360 is peer groups comparisons, or P groups for short. Um, so it offers a contextual way to interpret figures. Let's start by looking at the methodology behind peer groups, and then we'll move to the demo. So basically, what we do, we firstly start by extracting, collecting, and processing millions business reports, and we identify a peer group. A peer group is mainly a group of companies, but built based on three criteria. The first is the sector, the economic activity, the geographic area of the country, and the size of the company. So once we have a peer group built for each company, the second step is computing the quartiles, so the position of the company according to each ratio we presented in the previous slide within this group. So it can go from 1 for the lower quartile to 4, the highest quartile, and we deliver visuals to help you interpret and understand whether it is good or not, green or red or intermediate. Finally, the ranking are displayed, and uh, we do provide this comparison in parallel to raw financials. So can you have the financials and their positions? We can move to the demo. Ruth can explain the financials, and I can go through peer groups.
Okay, thank you so much, Yusuf. I would share my screen now to show the financials and what it looks like on over 360. Right. Right. Beautiful screen with a lot of colors. Uh, if this is your first time seeing the Over 360 tool, this is what it looks like. Like I highlighted earlier on the call, was we have 6 insights that we do put under the over 360. So it gives you a 360 view of your company's affairs, where we have the score, and at the score is where we measure your company's probability to default in the next 12 months. The credit opinion, where we would have a company give a credit opinion and the highest recommendation of a $1 million. The financial ratios based on peer comparison that we'll be digging today, the late payment index, the country risk assessment, and the sector risk assessment. We definitely would have on the 360 view, we have all this information about the company, the basic KYC data about the company. This is a proxy company called ABC. The informations here are all proxy informations just for the purpose of the demo. We'll be going and we'll be digging on financials. When you click on the financials button on the wheel, you would see the financial ratio. You would see the peer group comparison, the activity sector based on profitability, financial structure, solvency, and liquidity. But right now, I will give the floor to Yusuf to talk highly on the financial ratio based on peer comparison, and then I would come back and do a deep dive of financials on Urba360.
Thank you, Ruth. So for this example, we prepared ABC. Uh, we first display the two ratios for each category: profitability, financial structure, and solvency. And in the same page, we have in detail profitability. So let's start with profitability. These firm sales increase by 50% belonging to the highest quartile in green in the right side of the peer group. However, even if its sales and net income, the second line, are among the top performing companies within the same group, we can see that the return on equity or the financial performance is in a relative lower quartile. We can see it in orange with the level of 17%. Uh, we can have different uh, reasons for that, and it highlights the fact that ABC doesn't perform as well as its competitors in terms of financial performance or return to shareholders, even if the sales are high. One explanation can be the high level of operating costs or high level of cost of debt interest rates. And the next step would be to analyze deeply the financial accounts. So this is one way to use peer groups and to have first interpretations and alerts. Uh, Regarding financial structure, we can focus on the DSO, days sales outstanding. So days sales outstanding measures the number of days that takes a company to retrieve cash from clients. So we can see it at a level of 100, but as a raw value, we cannot know exactly we cannot assess if it's good or not. So it depends on the sector, the size of the company, and the country where it is operating. So 100 days is clearly red, and you can see that some ratios are to be maximized. So green when it's at the higher quartile, or red, this ratio rows are to be minimized. So DSOs are clearly days to be minimized, and when they are low, it means that the company get back its cash from clients fastly. And days payable outstanding is the number of days before paying suppliers. So it's 100 days as well. There is a kind of equilibrium, and it's quite good for this sector. So it meets its commitments on time. This is what we can say regarding DSOs and DPOs. And of course, we can check the shareholder equity evolution with an increasing trend, but the equity ratio, equity on total assets, isn't as green as the proportion of equities increase. Uh, when it comes to solvency and liquidity, there is no green rank. Uh, so liquidity, or the ability of the company to pay its short-term commitments uh, on time, are low according to the sector. So the situation worsen even if the company is profitable. And although the current ratio is higher than one, because the set reference is one means that the company has enough cash to pay, but it's not enough high in comparison to other companies within the same group. For if it was a client, it suggests that it exists other clients with a more liquid situation, uh, and even if the situation absolutely is correct for ABC. Uh, and debt to equity remains in mid quartile, the leverage, even if the company increases its equity by more than 90%. So this is a way to analyze the ratios, the role ratios, and their position within the group. Um, if you have any question, we may discuss them after the presentation. And if we come back to the top of the page, we have a summary of the main ratios. You can see that profitability is okay, financial structure more or less, and solvency and liquidity not as good as the sector.
Okay, thank you so much, Yusuf, for that. Um, I would be showing you now. Let's go into the financials, right? Um, to make it more practical, Yusuf has been able to explain to us how the peer group comparison works and how the quartile ranking works, what we look out for to do the peer comparison. But here is that is the COFA's insight on the financials of the company you're searching for, your partner, your supplier, your buyer. Now, this is the financial of company ABC. And if you look at the top part side of the view, it shows you key financials. Here you'll be able to get key financial based on their assets, the turnover, the equity capital, the operating result, not peer comparison, but of the company. Also, you could see the percentage comparison or margin between the previous year and the current year that you would be looking at. Before we go on, just to show you, this is a standardized format that simplifies the financial evaluation. You know, the standardized format created here at COFAS definitely covers the fixed assets, the current assets, the equity capital, the total liabilities, the bank loan and overdraft, every essentials that is needed in your financials. You could also see the profit and loss and where we have the operating income, where we know this, the operating income will tell you, gives you a clearer picture of a company's profitability before interest and taxes, which that is also looked at here. And you could also see the cash flow position in the net profit and loss. This is a standardized format, like I said earlier. And then if we've had the data of the company the year prior, we do also include that. And I think it's up to 3 years that you'd find on the dashboard. You could also see the percentage difference and all of that. Right. I know that we've been talking about a lot of numbers, figures, peer comparison, and all of that. But I just want to drop a poll question to see if you understand from a supplier's point of view. The if short-term liabilities surge, what is the biggest concern? I'm going to publish this poll now and I would like to see your response. So, as a supplier manager or CFO, you're looking at the financials and then you see that their short-term liabilities surge. what's your biggest concern on liquidity issues? Is your concern the liquidity issues based on delivery risk, heavy debt or unstable future, the price hiking, or you have no idea what it means for your supplier's short-term liabilities to surge? I'm going to keep this on for a minute and then check the response. Um, okay, we have about 60%, 62% saying liquidity issues affect the delivery risk of your supplier. Another 19% says the heavy debt based on unstable future. 70% says no idea. Okay. Just to say that I'm good to the feedback or the response that I'm having shows that we are understanding what a financial is and how we could make strategic decision either as a supplier or not. I'm going to publish another one, and I would like to see your response. So the next poll question I have is: a supplier's margin drops from 15% to 8%. What's your take? If the profit margin of a company drops from 15% to 8%, would you say this is a normal fluctuation, rising costs, or price risk? Is this a liquidity risk? I, is the advice that you monitor your supplier closely, or you still have no idea if a margin or the net profit margin of a company drops, just like we have on the screen here? Um, let's imagine this has a plus 17%, right? Imagine this is a minus 17 compared to before where they had a green that shows plus 13%. What would be your take on that? Right. Okay. We see that we have some responses coming in. About 50% says rising cost or price risk. About 24% says liquidity risk, monitor closely. Someone say 14% says normal fluctuation from a 15% to 8%. I think this is also dependent on the sector for you to think, for us to assume it's a normal fluctuation. Right. Not to bore you with my polls. I just have one more poll. This may be interesting because it has the discount in it. If a supplier offers 10% discount, but margins are failing, what do? You have a supplier or a partner that is offering you discount on the raw material you want to purchase or the business you want to purchase. Would you accept you know, saving matters? Would you accept the discounts? Would you negotiate better payment terms with the fact that you are aware that your margin, your profit to margin for the previous year or the previous quarter has fallen? Would you ask for guarantees that they deliver on their production, or you still have no idea what you're going to do? I think this would be a good time for us to negotiate better payment terms, ask for guarantees as well, and also accept a discount. It's a discount, but we need to ask for guarantees because from the financials we can see that their operating income is dropping, is falling, their net profit is falling. You need to ask for guarantees or get a new supplier in line. Anyways, thank you so much for responding to all the questions and the polls that we have. We'll now go back to the presentation. Another thing to know is the financials on Urba360 can be downloaded as a file, as an Excel export. I know that you'd have that question to ask, so this is responding beforehand. Just to go back to the slides. Yes. So how, with the information we've had today, how do we use peer group comparison to help with the strategic decision making? I would like to ask Yusuf some questions and see how peer comparison helps with this. Yusuf, if you're negotiating with suppliers, what would you say a risk manager has to, what are the key metrics they have to look at in the peer group comparison before they make a decision, or how would this help with negotiating?
Well, If a decision maker had to negotiate with a supplier, for instance, um, peer groups provide uh, a competitive advantage before entering in negotiation. So we can any decision maker can know in advance uh, what is in average the payment term to negotiate with the supplier. So it gives a competitive advantage. And uh, so and the second point would be the financial structure to define whether the relationship with this partner can be established in the long term or in the short term, and to be careful about its financial situation. I'd say these 2 points: the term to negotiate and the financial structure and stability
Okay.
that can be represented with a high equity ratio, for instance.
Okay. Just to make it clear or to ask further, would you say the DSO, the day sales outstanding position, should also be looked into to help suppliers or of supplier to make good negotiating terms? Would you say the DSO is part of a key of the peer group comparison to look out for?
Yes, so for when negotiating with the supplier, when we look to the DSOs, we are its client. So we can know in advance what are the terms uh, used and negotiated by other clients before we enter in negotiation.
Okay. Thank you
So
so
the
much.
higher they are, if it's 100 days,
Mhm.
we can in advance try to negotiate around 100 days.
Okay. Thank you so much, Yusuf. I have another question. How can the peer group comparison help evaluate a prospect or a new client's ability to pay its bill? I'm sure there are some ratios or key metrics we have in the peer group comparison that we could look out for that would help new clients or a prospect to check if they have the power to pay the bills or their invoices.
Exactly. So the most important is cash and easily convertible assets to uh, in cash to pay uh, the uh, uh, the bills. And but it's not limited to. We should look out the cash evolution that should at least remain steady or increasing. Um, so liquidity and cash are clearly the main points to verify, and they represent how the new customer or prospect can pay on time, and if there is a decline in liquidity or cash that could lead to longer payment terms or non-payment of receivables at all.
Thank you. I think my final question would be targeting how does peer group comparison help with strategic decision making?
So in addition to negotiating with suppliers or assessing uh, solvency of clients or prospects, it can be used for any uh, strategic decision. Or for instance, it can be used to evaluate potential acquisition by providing relevant information about the company's performance relative to its peers from an M&A point of view. But in summary, peer groups comparison provides an insightful view of how a company is over or underperforming relative to its peers uh, in three key areas: profitability, financial structure, liquidity, and solvency.
Thank you so much, Yusuf. Thank you all for staying engaged. I hope we've been able to explain the how to make use of the peer group comparison to help have a foundation for smarter decisions, safer partnership, and long-term success in doing business with and doing businesses. I think I would let Olga handle now.
Yes, thank you so much, Ruth and Yusuf, for this walkthrough. Now it's time for our Q&A session, and we have quite a few questions already submitted in the chat and in the questions tab. So now, could you please make sure to answer them as long as we have the time? We only have about 10 minutes left. So please, everyone, if you have more questions, feel free to send them in the chat. The first one will be from Dirk. You can see in the chat the very first questions.
Yes.
I think Ruth is for you.
As I say, so the question says, hello, nice colors and nice figures, but where does Cofers get the data from? I guess that depending on the country and the legal situation, not each country is obliged to publish all their data, sales, and turnover. Yes, that is true. Like I earlier mentioned on the call, Cofis has been in the business for about 75 years, and we definitely have partners who are business information providers that we partner with to get this data that are legally published. So when it comes to financials, we oblige or we get data that are legally published, and we publish them on Urba360. And we are aware of each country's of right to publish and the limitations, the legal situation by country. But we publish the financials that are legally allowed to be published based on their country's law. The next question says, what are the biggest advantages over COFA's essentials and the DRRA monitoring available there? This is a good question. We all know that the fact that we've been a credit insurance for about 75 years, that's our biggest advantage. We have a skin in the game. We're using our statistics and models for the trade credit insurance business, and we see your buyers and suppliers and partners one crossing one way or the other, either due to policies or not. And that is our skin in the game. The fact that we're trade credit insurance backed with good business information data, and we are aware that good business information data is needed for business to make smarter decisions and to work with. The next question is the credit recommendation. Is the credit recommendation similar to the available credit insurance? I would say it is not similar. The business information part of COFAS is business information. It's more or less to help with your decisioning in with your partners and suppliers. It is not an actionable advice. It's a decision-making platform that helps aid your decisions. I think this question is for Yusuf. It says, are peer group metrics recalculated in real time as new data comes in, or is there a set of update frequency?
Yes, the question from Serena. Well, financial ratios used to build peer groups are extracted from data published by individual companies each quarter. So we update the database regularly and at a quarterly basis. So the last update was completed 2 weeks ago to consider the full reports published by the end of the year, and the next update is planned in a month. I think I have another question related to DIO from
Yes.
Stefan. Will you please explain DIO? Yes, I didn't, and it's a good question. So days in inventories, it stands for the number of days furnitures or any goods remain in the inventories of a company. And the example we presented with Ruth, we have 0 in DIO. It was normal because it's a service company. It doesn't have any goods. And the DIO depends clearly on the sector and how long a product stays in the inventories before it is sold. So it depends on the industry, and it represents the number of days a good is stays in the inventories of a company, and it's a kind of investment. The highest it is, we use more money to fund these inventories. Um,
Thank you, Yusuf.
is there any questions we can answer?
Yeah, so I'm looking through. I think the next question is the shareholder structure available in
Mm.
Urba360?
Is the question about the links, the corporate links?
Yes, but the question directly is to see if we state the shareholder links on Urba360. Currently, if you go on the application, you wouldn't see the shareholder links there. But if you get or export the PDF exporter report, you can see if they have subsidiary links on there. I hope that answers your question. I'm looking for another question. Do you get the position afterwards? Yes, you do. Um, yes, I think for every other question we are not able to respond to here, Olga would help in facilitating the response, I believe.
Yes, definitely, because we have a limited time. We only have 1 minute left, and we also have questions in the questions tab,
Oh,
like how Urba helps identify growth opportunities in addition to managing risks, a few others. We'll make sure to collect the questions and provide you answers by email if some of those questions were not answered. So thank you all very much for joining us here today. Thank you, Ruth and Yusuf, for being our wonderful hosts. It was a great session. And if you have any further questions, please feel free to reach out, or if you want to delve deeper into Urba360. And we look forward to seeing you in our following sessions. Have a great day, everyone.
thank
Bye.
you. Right.
Bye. Thank you.